please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
I have stepped down as the Chief Minister of Karnataka.
They have been shown that in India, power is not everything.
Democracy wins and the role of the Supreme Court wins.
The Honorable Governor knew pretty well that the BJP does not have the numbers.
The BJP and the Prime Minister, they stand exposed.
So I think Amitabh Bachchan said in one of his famous films, इज्जत भी गई और काम भी नहीं बना.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me Anuj and Sonia. My sense is this news is largely in the price that the numbers may not go the BJP way. It was known perhaps on Friday itself. I'm not too sure there's more to react, but we will have an expert to tell us what he's made of it. I think the morning cues actually are slightly better, and I'll tell you why. It's just that the macros don't seem to have worsened. Crude has not gone past $80. It was trying to touch that last week. Things are about as bad as they were last week from an India standpoint. And of course, now there is a little bonhomie in Asia because of the US-China trade talks probably progressing well. So the bond yields, again, have not gone beyond 3.12. They are at 3.07 in the US 10-year. Crude as well, not above 80, but more closer to 79. So perhaps some of the bad news has been digested. And most importantly, we've had a lot of small news that's very positive in terms of either corporate numbers or corporate action. You know, you can go on through the BSE or the NSE and you will find so many companies either announcing acquisitions or capex plans or raising a QIP. So clearly the micro growth story is day after day looking much better, and at 10,600 probably it's time for some support. But of course Anuj will tell us that. Morning both of you.
Hi Lata, good morning. So straight to Anuj then. Anuj, the Nifty has lost what, almost 350 points since the 15th of May. You get a sense that this market is sort of oversold and a lot of the news is already in the price?
Morning, Sonia. You know, we have a habit of saying, is it fully priced in? And sometimes we know, you know, we know it later. Look, this first I'll discuss the near-term setup, then I'll just make a quick point about what I think of what has happened over the last 2 or 3 days. For now, you'll want to believe that it's now priced in from 10,930. The market now down to 10,600. It's oversold. The market is oversold in the near term. So the risk reward is not for fresh shorts right at the start, but it still is. I mean, if you see the Nifty and Bank Nifty futures, that's been completely wiped out. And there's been a lot of shorting by FIs. In fact, on Friday, there was addition of 18,600 shorts. If they don't get followed through, there would be some short covering. But what you'll have essentially is a short covering. And no more. Should not read much into that. The larger texture of the market is well and truly now sell on rally. So where does that selling opportunity come? My sense is I would want to see if this market has a classical 20 DMA halt at 10,680. If at 10,680 the market starts to turn again, first of all 10,680 is a long shot. We are at 10,596. But let's see if, you know, if suppose we go there and then we turn, I think that texture would be confirmed. Again, this rally, if it happens in mid and small caps, would be exit opportunity. This is going to be a year of large caps. A lot of people are stuck in, you know, low quality mid caps and small caps. You know, this is not 2017. The market won't be as forgiving. Just a point on what has essentially happened in Karnataka. And, you know, the sense you get is at the end of the day, what was the final outcome? The Congress was down from 100 and something to 70. The BJP went up from 35 to 104. And of course, JDS was where it is. And you now have a JDS Congress government in place. I think from the market's point of view, why this is important is this is now template for 2019. And template for 2019 is very clear. If the market's preferred outcome is for Narendra Modi to be the Prime Minister, in that case, the BJP has to go out and win 272 on their own. Even 260 will not suffice. So that way, a political risk is back on table. You know, on that day, it looked like that political risk is out. Exactly. Now that political risk is well and truly on because you know, you can conjuncture a majority even if the mandate is not for you. So that, I think, is a bit of a risk for the market from here.
I think in the meanwhile, the BJP majority has fallen to 272. because of some buy polls
Yeah,
and
that
a couple
is,
of...
yeah, but that is okay because it's maybe last year.
No,
so.
yeah, it is last year. And of course, they have solid support from some of their allies. So it's not as if the government is in danger, but it's technically just a point to note. We will, of course, have an expert joining us to tell us whether and how the Karnataka poll has to be looked at for the future template. Sonia.
Yes. Okay, let's start the show on that note, right? Let's tell you what all you can look forward to as we head into trade this morning. First up, an expert view coming in from Mahesh Nandurkar of CLSA. He believes the consumption theme is a no-brainer in times of macro uncertainty and especially during times when the government is trying to increase its popularity by spending on welfare programs. He says the recent quarterly results indicate the urban discretionary consumption has been doing quite well and management commentary indicates rural consumption is also showing signs of improvement. He adds the paradoxical issue, however, is to find value in the consumption theme. CLSA's relative value picks in this segment are M&M, ITC, Imami, Crompton, GSK Consumer, Z, Dr. Lal Patlabs, DB Corp, HDFC and ICICI Pru Life.
Fair point. Well, that's the micro view. Now let's get some money market views. Pravit Brahmata Veracity says after taking a breather, the rupee is set to depreciate further on the back of negative cues from domestic equity markets and higher crude oil prices. He expects the spot USD INR pair to trade in a range of 67.80 to 68.20. And I think when I mentioned all the negatives in macros have not gotten worse, the one that has gotten worse is the dollar. It's now heading towards 94.
Yes.
And, you know, people keep talking about memories of Argentina and Mexico and Turkey. So, dollar index is not working to our advantage, clearly negative EM.
Okay, yes, 5-month peak for the dollar index now. But we'll talk about that also in a bit. Before that, Ajay Magnolia of Edelweiss says the bond markets will continue to be cued into the trajectory of oil and the rupee, but will also track domestic news flow around possible steps to address the prevalent demand-supply mismatch. To begin with, he says trading is expected to be cautious with limited participation as underlying sentiment is still weak. He expects the 10-year benchmark bond yield to trade in a range of 7.81 to 7.87% today.
Okay, just a word on the bond markets. They had a huge rally on a Friday. They went to 7.83 simply because Cogensis carried a story saying that the DEA secretary is going to address macro issues. Only on that there was this rally to 7.83 from all the way from 7.89. Now, I don't know which way it will move. The DEA secretary did give some help to the bond markets in the sense he said that they will watch the performance or the reception to the various bond auctions and then tweak, you know, which tenor they are going to offer. I don't know how the bond markets are going to take it, but it's just an interesting theatre over there. Minus 7.83 or over 7.83.
Okay, we'll find out, of course. But let's talk about global cues. Here's Rima with the world view.
Hi guys, good morning. The big talking point in the globe is the possible trade truce between US as well as China. So while the US markets ended in the red in Friday's session with cuts of about 0.2, 0.3% for the key indices, the Dow was flat. The US futures are actually higher. So if you pull up the Dow futures, that's showing you a gain of close to about 200 points. The S&P 500 is higher by close to about 0.6%. The key statement coming in from the Treasury Secretary, Steven Mnuchin, is we're putting the trade war on hold. So right now we have agreed to put the tariffs on hold while we try to execute the framework. So while they still need to work out the wider details about the trade deal, it's still positive for the markets that they have struck a truce. That said, we need to keep our eye out on the US yields because that continued to rise. So last week, the 10-year Treasury yield broke past the 3.1% mark for the first time since 2011. The 2-year yield in the US traded at its highest level in the last 10 years. So that will put the spotlight on the FOMC later this week. That's on Wednesday. The markets are pretty much pricing in that the Fed is going to raise rates in the month of June. So let's see what comes out of there. The higher rates are also making the dollar more attractive. So 5 months of gains for 5-month peak for the dollar index, as you guys pointed out. It's 5 straight weeks for the dollar index, currently at that 93.8 mark. So that is something that the global markets are tracking very closely. And apart from that, the Brent crude prices higher this morning by about 0.7, 0.8%, but still below the $80 per barrel peak that Brent crude hit last week. Europe is mildly lower in Friday's session, so not too much happening over there. Asia is rallying this morning, again, on the possibility of the trade war being averted, at least for now. Gains are being led by Hang Seng, which has seen a rally of close to 400 points for now. Economic news coming out of Japan, where they've posted a trade surplus for the month of April again. And the SGX Nifty is suggesting a mildly positive start, so not participating in the hefty gains that we've seen across the Asian markets. Back to you.
All right. Thank you very much for that, Rima. We are just going to discuss that dollar index bit a little more and how it impacts the EM markets. Remember, the dollar index has ended with 5 straight weeks of gains, as Rima just pointed out, and now pushing almost 94, 93.78. Paul Kitney, the Chief Equity Strategist at Daiwa Capital Markets, joins us on the phone line. Good morning, Paul. Thanks much. Is this a Clemson level? Going beyond 94 would make you even more wary of EM markets?
So I'm still very positive on emerging markets. So I think sort of the real, when we sort of look at the key drivers, the gradual policy normalization in the U.S. is number one. That relates to number two, which is sort of the path of the U.S. dollar. And so long as there is a gradual policy normalization, that's consistent with a flat to mild appreciation of the U.S. dollar. So 94, 95 is not really a big issue. In addition to that, number three will be sort of the positive trade cycle that's not been affected so far by any of the trade-related issues that have been discussed and are high profile in the media. And the last point is that the commodity cycle still remains strong. So all these factors combined with an emerging market equity valuation discount to developed markets, which is the widest it's been in about 4 years, together is a pretty constructive case for EM. Now, what could derail emerging markets is a very strong dollar, a move up towards 100. And in the absence of, and of course the speed of which this takes place is very, very, very important. My feeling is that over the course of the next 12 months, at some point, the fiscal deficit in the U.S. will put a cap on the rally in the U.S. dollar. I don't think that's a very near-term thing. I think the oil prices near-term are what's, the biggest delta. But I think when we sort of look at everything holistically, the dollar alone is not enough to derail the EM case.
Okay. Paul, hi, good morning. What about your view on India? We've been having some state elections and the ruling party BJP did lose in Karnataka. So the fear is that this could be a template for, alliances between regional parties and the Congress leading up to the 2019 elections. Do you think political risk is heightened for markets like India, and would that make you a bit cautious?
That is a very good point, and that is one potential outlier risk for India. Overall, for India, however, when we look at earnings growth across the Asia-Pacific region for 2018 forecast fiscal year, we're looking at just under 20% growth versus Asia ex-Japan at around 13%. It's actually the highest growth of all the markets in the region. And valuations now are starting to look a lot more reasonable with this stronger outlook for earnings growth than they did last year. So we're looking at, on my basis, around 18.5, 19 times. This is much better than the low 20s that we saw, even a few months ago. So when we take that together with the path of the RBI, I think people are concerned, and rightly so, about the weakness in the rupee and rising oil prices potentially sort of being a driver for policy rates. But I think what we also have to realize is that rates were left alone during the consumption shocks of the GST introduction and also demonetization. In my view, they were kept too high for too long, which exacerbated that shock, which means now we're still left, even with rising inflation, with positive real policy rates. So I don't think that there's a lot of scope for a sort of a negative shock coming from monetary policy. So I think also now we sort of see the investment cycle turning around relatively strongly, and when we look at bottom-up numbers in terms of infrastructure orders at the likes of Larsen & Toubro and the other sort of major E&C companies, we can see that the domestic recovery is actually on track. Now, yes, the political side of this could be a potential question mark, but I think that's sort of more sort of when we're coming towards the sort of the national elections next year rather than the shorter term provincial issues.
Okay, Paul Kitney, it was a pleasure speaking with you. Thank you very much for joining us, both with the global macro backdrop as well as what you've made of Indian macros. Important point, not to worry about dollar index just yet, probably a dash to 100, and the speed with which it gets there is destabilizing, but not just yet.
And not even worried about politics, more impressed with the earnings growth that you're seeing across many pockets in India. That's interesting. Let's take a short break on that note. We'll talk about just that on the other side. Earnings and all the numbers that came in post-market are CNBC TV 18's top 10 list of stocks. All right, welcome back. While we're still trying to get over that beautiful royal wedding at the Windsor Castle over the weekend, it's back to reality for us and tracking all the action here on the Lal Street. This morning, the Asian markets are actually moving up higher, so it's not a bad place to be. Just look at some of them. Hong Kong, I think, is rallying quite a bit this morning. Look at that, almost a 400-point bump up on the Hong Kong market. Nikkei and Shanghai are also up and about. But of course, we've had issues of our own, so let's see whether we see any short covering today. Anuj, what are you looking at today?
So, Sonia, this is a market in which you have to stay with the quality. 2 weeks back, we were discussing Kotak Mahindra Bank, the biggest compounding story of last decade. And that one continues to make new high. Big delivery buying continues. So that is phenomenal. Again, it may not work out as a day call, but the point I'm trying to make here is you got to stick with the market's verdict in some of these names. Colgate is the other one, buying seen in both cash and F&O. And the stock's at a new high ahead of results. So will be interesting to see, but the last hour was phenomenal in Colgate, the kind of buying that it saw.
Okay, that's important, and of course the results coming in. Let's get to the story of the morning, which is going to be Ultratech buying up the cement business of Century Textiles. Nigel is joining us on the phone. Nigel, tell us the math. Good for Ultratech, you were telling us.
That's right, Lata. In fact, it's good news for Ultratech, not so good news for Century Textile. Shareholders. The basic deal is that, in fact, Ultratech will get nearly around 13 million tons. That's around 11 million tons of integrated cement and around 2 million tons of grinding capacity. The total value is around 8,600 crores, or that's the enterprise value. Let's get to the key numbers. Ultratech Cement on an EBITDA basis, its profitability is nearly 500 rupees more than Century Textile because it gets nearly around 850, 870 rupees in terms of an EBITDA per ton. Century Textile's profitability is far lower than that. But in terms of an enterprise value, well, Ultratech Cement is trading at around $190 per ton, and they're getting this deal at around $100 per ton. So clearly, that's positive for Ultratech Cement shareholders. For Century Textiles, well, the key disappointment is the number is even lower than 10,000 crores. Remember, if we value it at around $115 on a per ton basis, then it comes to roughly around 10,200 crores odd. So that's a disappointment. What remains for Century Textile is the pulp and paper business. You value it, at around 3,500, 4,000 crores odd. And the real estate business, 30 acres of land in Worli. But all that for another day. We'll have to value that at a later date. Century Textiles should open up in the red, Ultratech in the green. The other key question is, will it pass muster in terms of the CCI nod? And finally, will minority shareholders of Century Textiles approve this deal? Both stocks will be in focus. Ultratech, good deal. Century Textiles, well, it's lower than what the street would have been working with.
Okay, thank you very much for that, Nigel. But yes, majority of the minority shareholders will have to approve, and we'll have to first pass that test.
Okay, well, that's on Ultratech Cement. Could easily be the stock of the day. But the other stock to focus on is Ashok Leyland this morning. The numbers came in post-market hours on Friday. And it was a stable set. No surprises either way, either positive or negative. It was slightly below what the street was estimating. So in that sense, maybe there could be some pressure. But otherwise, the revenue growth was good, about 34%. EBITDA growth was 50%. Realizations have improved, almost 15 lakh rupees per unit in terms of realization. That was a growth of 7% on a year-on-year basis. Raw material costs have increased, but they've increased for the entire sector, and the management has said that they are confident that they'll be able to manage raw material costs enough that it would not impact their margins going ahead. In fact, demand traction also continues to be quite strong, and even if there is a relaxation on the overloading ban in certain states like Uttar Pradesh, they don't see that having any impact on growth.
Okay, that's Ashok Leyland, of course. Anisha, what about Thermex?
Well, it's operationally weak quarter, Anuj, because if you look at the top line, the street was expecting a growth of 20-25%, but the company actually reported a decline year on year. The number came in close to 1,450 crores versus 1,700 crores expectation. The margin also declined to 9.4% versus 11.4% last year. Remember, the management had guided for a 10% margin for the entire year, and the ask rate was 12% for quarter 4. They clearly did not meet that. The profit is a tad bit better because the loss from subsidiaries and associates have reduced, and that's the only silver lining in the numbers, but otherwise it is weak.
Okay, thank you very much for that, Thermax. Not so good. Sonia, Amara Raja also not living up to expectation?
Yes, and compared to how Exide did, I mean, I thought Amara would do as well, you know, but they actually saw pressure in their margins, so that's why I expect the stock to be in the red today. The revenues are fine. You know, that's the thing about this quarter. Revenues are good for everybody. It's the operational miss that's because they can't perhaps manage higher raw material prices, no pricing power, and that's what Amara Raja has faced. Higher lead costs have impacted their margins. 180 basis points quarter-on-quarter decline in gross margins is a concern. The other expenses have gone up as well. And just to compare both Amara and Exide, Amara's margins have fallen 30 basis points this time, while Exide's margins have risen 80 basis points this time. So I expect Amara to underperform Exide as we go ahead.
Okay. All right, that's on Amara. Now back to Fortis. The saga goes on. This time, Yes Bank's becoming the policeman?
Yes, Lata, well, you know, a lot of developments on Fortis, and I'll start with the two independent directors actually stepping down, Harpal Singh as well as Sabina Vesoha. And remember that there is an EGM due tomorrow on the 22nd of May, which would have included the shareholders voting for these two independent board members to step down, along with two more, which are a part of these old board of the old board of Fortis, which is Tejinder Singh as well as Brian Tempest. Separately, like you mentioned, reports have indicated that Yes Bank has put a lot of pressure on the board in order to consider the revised bid from Manipal as well as the continuation of a bid from IHH.
Okay, Ekta, thanks a lot for that. Abhishek, Manappuram Finance's numbers?
Well, Anuj, it was a good set of numbers, the loan growth being the highest in last 4 quarters at 15.4%. That was largely driven by the MFI portfolio as gold AUM remained in single-digit growth. However, gold disbursement grew by 61.5% YOY and about 26.5% quarter-on-quarter. Asset quality remains stable with gross NPA at 0.7, but asset quality for MFI business improved by 147 basis points sequentially to about 2.33%. The earnings, however, were a tad below analyst expectation, with ANA at 622 crores and PAT at 183 crore versus 199 crore of Phillip Capital. Expect the stock to be in green today.
Okay, thanks for that. Sonal, back to you. Shobha Developers?
Well, the company is breaking its own record. Strong set of numbers this time around. Revenue went up by 31%. Even the profits, they went higher by around 42%. In terms of collections, the company reported highest ever collections at 910 crore rupees, which went up higher by 35% sequentially and 31% on a YOY basis. They also reduced their debt by 128 crores in this quarter. Also, the order book for the contracting business, that was at record high at 1,740 crore rupees. Macquarie, that has an outperform rating on the stock with a target price of 646 rupees, and they say that the pre-sales momentum that the company has been showing and also the debt reduction are key positives for the company, and going forward they expect the stock to outperform.
Okay, thanks a lot for that. So that's Soba, but the stock that really got pummeled on Friday was Stride Shasan. Ekta joins in to tell us more on that. Ekta?
Well, the conference call took place on Friday evening. They have guided for the US sales to ramp up to at least $120 million in FY19. Brokerages are a bit mixed on Strides. Jefferies, for example, says that the stock is pricing in the worst case. Motilal has lowered the PE to 15 times versus 18 times, but they've retained the buy. Macquarie has downgraded the stock. So maybe there could be a little bit of pain that could continue for the stock.
Okay, Ekta, thanks a lot for that. Yes, Friday was really interesting. There was absolutely no buying interest in Strides, kept making new circuit. Sonal, what about other results?
I have all the good ones in my kitty. Dalmia Bharat, strong set of numbers. Revenue went up by 8% at 2,600 crores, and the poll threw up a number of 2,500 crore rupees. Net profit went down by 3%, but with the expectation was it declining by around 22%. So expect that stock to be in green today. Tata Chemicals, strong margin expansion, mainly driven by the inorganic chemicals business. Motilal also has a buy rating on the company with a target price of 941 rupees. That indicates a 31% upside from the current market price. Gulf Oil Lubricants lubricants, another strong set of numbers. The margins expanded by 150 basis points due to lower costs. The profits also went up higher by 32%. The company has a strong guidance. They say the market demand conditions are picking up, and they also expect more demand coming up for the company.
Okay, Sonal, thanks a lot for that. So lots of good numbers coming in there. But the Future Group has been in focus all of last week. A lot of the stocks spiking up. Mangalam joins in. Mangalam, how are Future Lifestyle's numbers?
Well, Sonia, the reported numbers were slightly muted, but internals for Future Lifestyle looked fairly strong. So if you take a look at the reported revenue, that one was down by almost 1%, but like-to-like revenues were higher by about 8.5%. The EBITDA margin came off by 50 basis points because the company is expanding. However, what was encouraging was this response that we saw in the same-store sales growth of Brand Factory. That one grew by about 13.7%, as against Central, which grew only 1%. That is because the end-of-season sale was preponed into the previous quarter. More importantly, the company went ahead and issued some preferential equity to L. Catterton, which is a joint entity between Catterton Private Equity as well as LVMH, Louis Vuitton Moet Hennessy, that is. So that is something I'll watch out for. Expect the stock to open in the red because of reported muted numbers, but may see some interest at lower levels.
Yeah, and also because it's climbed a lot. And after that, if you post flat revenues and a profit that optically is lower by 64%, I think the market will be a little worried. Okay, Anisha, other stocks on your radar?
Well, I'll start with Indigo Remedies, where US FDA conducted inspections at 2 of its units. One unit got a clean sheet. The other one, the API facility at Patal Ganga, got 3 observations, but they are not critical. So relief rally is what we might see on the stock. Indiabulls Real Estate, well, the board has approved a buyback of around 620 crores at a price of 250 per share. Current market price is around 205 per share. So we might see some bit of technical adjustment there. Remember, the acceptance ratio of the promoter does not participate is around 8.7%. So keep an eye out on that. Endurance Technology, where they've got an eligibility certificate to expand their mega project. They're also eligible for an incentive of around 280 crores. So might see a green tick on that. Talking about expansion, OCL India is also embarking on a expansion spree because they are doing an investment of around 3,800 crores on their expansion. And similar is the case with Dharmia Bharat as well, because they are setting up a new cement plant in Orissa. So that might also see a bit of green tick. Back to you.
Okay, thanks a lot. So that's a really exhaustive list of everything you need to look forward to as we head into trade today. Here's a quick recap though. Stocks expected to gain today: Kotak Mahindra Bank, there's Colgate, Ashok Leyland, Ultratech Cement, Fortis Health, Manappuram Finance, Soba, Dalmia Bharat, Tata Chemicals, Gulf Oil Lubricants, Asian Granito, Gujarat Ambuja Exports, Sanghi Industries, Den Networks, PNB Guilds, Indoco Remedies, Indiabulls Real Estate, Endurance Tech, and OCL India. You want to take the red list?
Oh, absolutely. Thermax, Amara Raja, Century Textiles, Berhampur Chini, Strides Shows.
Okay, that gave me some time to take my breath, catch my breath. So let's take a quick break. But how do you approach the start of a new week? Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar will be with us.